Trump and Elon Musk's 3.0 strategy to harvest global assets. If you're still investing in stocks, bonds, especially in the US, or simply holding cash and doing nothing, your assets will face one of two fates: gradual decline in value or a sudden devaluation. Why? Because Trump and Elon Musk are outwardly pursuing government reform, but may actually be aiming to dismantle the Federal Reserve. On the surface, it seems they're clashing with Jerome Powell, the Fed's chairman, but in reality, they could be trying to erase their debt. What does this mean? Hello from FortuneCraft, ladies and gentlemen. In the past, the US convinced the world that as long as you handed over your gold to be stored in its national reserves, you'd receive US dollars in return. You could then use those dollars for trade. Very convenient. Whenever you wanted your gold back, you could simply exchange your dollars for it. This system, known as the gold standard, meant the dollar's value was backed by gold, but the US eventually abandoned the gold standard. Since then, you can still trade with dollars, but if you bring them to the US to reclaim your gold, they won't honor the exchange. Essentially, the US has been printing money to acquire the world's gold. The global economy then shifted to using dollars instead of gold for trade. The Federal Reserve consistently lowers interest rates and prints more money, causing the dollars held worldwide to rapidly lose value. So, the US tells you your dollars will depreciate. They ask you to lend them those dollars, promising interest in return. This forces the world to lend dollars to the US, leaving the country with an enormous debt it can't even pay interest on. Elon Musk, the mastermind behind Trump's rise to power, has proposed an unprecedented idea: shutting down the Federal Reserve. If the entity responsible for issuing dollars were eliminated today, would those dollars become worthless? Would the US then repay its massive debt with a currency that has lost all value? It's like saying, I owe you a fortune, but since the currency is now worthless, there's no point in paying you back. Many find this idea astonishing. Could the US really abolish the dollar? Why would Musk suggest that in the future, the US might abandon the dollar and adopt Bitcoin instead? If such a plan were enacted by those in power, all the money the world has lent to the US could become unrecoverable. Is this plausible? In fact, the US is already gradually reducing the dollar's dominance. This year alone, 6 states have recognized gold as legal tender. What does this mean for the US? Sometimes, a state's authority can outweigh the federal government's. This suggests states might not follow federal decisions. These 6 states are saying that in addition to dollars, people can use gold for global transactions. Typically, countries use their own currencies for trade. For instance, you use yen in Japan and won in South Korea. No one brings gold to buy a bowl of ramen in Japan. Paper money is cheap to print, while gold requires costly mining and processing. For convenience and cost savings, nations usually issue their own paper currency for trade instead of using gold. But if the trend shifts back to gold as a currency, the global financial system will face seismic changes. If you told me today I could pay with Bitcoin or other cryptocurrencies, perhaps by scanning a QR code with my phone, I'd see it as technological progress. I'd think you're making things convenient for me. But if you now force me to revert to ancient times, carrying gold in my hand to buy things, what does that signify? In my last video, I discussed an alternative to the dollar: gold. When the dollar rises, gold's value tends to fall. If people start trading with gold instead of dollars, will the Federal Reserve, which issues dollars, lose its power? That's why even Warren Buffett wouldn't recommend buying gold. He fears it could undermine the dollar system. Now that some states are tying the dollar to gold and encouraging its use, is this a sign they believe the dollar is in trouble? Are they preparing people to convert dollars into gold before things deteriorate further? Recently, Trump seems to have softened his stance, saying he won't force the Fed chairman to resign. What does this mean? Perhaps this could be the greatest financial scam in history. It's worth noting that this has been legally possible for the past 4 years. Trump's covert plans were stalled by Biden. But with Trump back in the game, these upgraded money-shifting tactics will resurface. The hard-earned money, sweated and cried over by countless people for half their lives, could vanish in an instant. What does that mean? If you don't want to be a pawn or victim in this game, or if you even want to exploit it to rise above your current class, follow my channel for upcoming videos. I'll provide more insights. If you're worried you'll forget what to do after watching, click on this video to save it to your playlist so you can re-watch it anytime. So, what is Trump's plan? The United States currently lacks sufficient funds, so it needs to pull money back from around the world. His plan is an enhanced version of this transfer. If successful by 2025, the wealth of the global middle and lower classes would flow back to the U.S. Simply put, the U.S. has borrowed your money but can't repay it, so they intend to shift the burden onto you. The lenders. Why did the world lend to the U.S. in the first place? It's simple. If I lend the U.S. $1 million today, they'll invest it in their economy through taxes and profits, generating $200,000 annually. They'd pay me $50,000 in interest, benefiting both me and the U.S. I wouldn't mind continuing to lend, but the U.S. isn't what it used to be. After borrowing $1 million, they now invest only $300,000 in productive ventures. The remaining $700 is squandered, meant to subsidize Americans, but instead lining the pockets of a select few. This causes U.S. tax revenues to plummet while spending soars. As a result, they can't pay me the $50,000 interest anymore. They'll need to borrow again to cover the old loan, and when interest on that $50,000 comes due, they'll borrow more to pay it. This cycle continues, borrowing new loans to repay old ones until there's not enough money to sustain it. People eventually realize the U.S. is like someone living off credit cards, spending everything each month without paying it off. When debts mature, they can't settle them and must swipe another card, accruing more interest and ballooning the debt. Over time, lenders grow wary of extending more credit to the U.S. That's why, in recent years, the Federal Reserve has raised interest rates, hoping to entice global lenders to buy U.S. government bonds. Yet, even with higher rates, long-term U.S. bonds aren't selling. Why? Simple. Even if I can't repay my debt, I might say, lend me $100 million for 10 years, and I'll pay you $5 million in interest annually, instead of $2 million. Sounds attractive, right? But the borrowed money isn't being invested profitably. It's just used to pay you that $5 million interest. After 10 years, will I repay the $100 million principal? You don't care, as long as you get your $5 million each year. But would you still lend to me? Textbooks say, when the U.S. raises interest rates, bond yields rise, and when rates fall, yields drop. Yet now, despite rate hikes or cuts, bond yields have increased. Why? If lots of people want to lend to you, you might pay just 2% interest, but if you're forced to offer 5%, it shows no one wants to lend. Currently, The U.S. borrows about $50 billion for 10 to 20-year terms and $400 billion for 2 to 3-year terms. For short-term loans, 3 months to half a year, it borrows upwards of $1.5 trillion at high interest rates. This suggests people don't trust the U.S. to repay the principal in 10 years. But for short-term, high-rate loans of 3 to 6 months, lenders are willing. Even Warren Buffett, a patriot, buys only short-term U.S. bonds, not long-term ones. To keep borrowing, to repay debt, the U.S. has been forced to take out short-term loans at high rates. But Trump claims that when he takes office, these loans will mature and fewer people will lend. Eventually, lending will dry up. So, Trump wants to keep cutting interest rates. But what's the end game? The U.S. would have to print more money to repay its debts. As they print, the dollar inflates and devalues. This creates a vicious cycle. Fewer lenders, more printing, greater devaluation. As the dollar loses value, U.S. assets effectively sell off at fire sale prices. Trump aims to address this when no one wants to lend or use dollars anymore. One extreme option: abolish the Fed and switch to Bitcoin instead of the dollar. Is that feasible? The Federal Reserve, the U.S. central bank, isn't a government entity. It's private. Trump can't fire its chairman, just as you can't fire the CEO of a company you don't own. You could bankrupt it, but not fire its leader. Surprisingly, the U.S. owes the most to the Fed, not Japan or China. The Fed issues dollars. When the U.S. runs short, the Fed prints money and lends it to the government. That money must be repaid, and most tax revenue from citizens flows back to the Fed. This implies the Fed might effectively own the U.S. The money you toil for ends up as interest in the Fed's pockets, and they just keep the printing presses running to collect it. So, who controls the Fed? Rumors suggest a secretive family with assets exceeding $50 trillion, while U.S. debt is around $36 trillion. Recently, U.S. media reported an heir to this family died in a mysterious fire. What does that mean? Share your thoughts in the comments. History shows that those who've tried to dismantle the Fed, like Lincoln with his greenbacks or Kennedy tying dollars to silver, met grim fates. You can research this further. I don't understand why people assume government debt is always repaid. U.S. bonds are deemed the safest assets globally, but history proves debts can go unpaid, or nations can default. They might pay interest, but not the principal. That's the U.S. today. This could persist for years. So many don't care. But when you hold cash and the U.S. cuts rates or prints money, your hard-earned savings lose value instantly. No investment is entirely safe, and not investing can be riskier still. Even if you avoid learning to invest, you'll eventually have to confront it. Elon Musk's talk of abolishing fiat currency suggests he doesn't want to prolong its use, but I think this is a last resort. Trump has upgraded his strategy to trick the world into lending to the U.S. to help pay its debts. What does this mean? In version 1.0 of the U.S. debt strategy, they sold weapons during global conflicts, profiting without fighting. When wars ended, the U.S. seized opportunities to enrich itself while the world stayed poor. Then the U.S. said, "You lack money and resources, borrow our dollars to rebuild your homes and factories." They'd sell you their goods, but you'd owe interest. The U.S. became the world's creditor. Everyone's income globally paid interest to the U.S. Like a mortgage, you live in your house, but your wages go to the bank. This 1.0 lending strategy made the world the U.S.'s employees through high-interest loans, but it stopped working. The world's homes and factories were built, economies recovered, goods were produced, and profits soared. No one needed U.S. loans anymore. Americans, used to being the bosses, relied on global income to spend freely. As lending declined and profits fell, the world produced more dollars, forcing an upgrade to Strategy 2.0 heavy borrowing. With the U.S. expanding its balance sheet and printing money, dollar devaluation loomed. To avoid losing value, you'd lend your dollars to the U.S. for interest. That loan, meant for profitable investment, was siphoned off by domestic cartels. Now, even the interest isn't sustainable, leading to Strategy 3.0 outright theft. The world earns dollars by selling goods to the U.S. After earning them, you must pay back 30% to the U.S. For example, if you make $1 million from the U.S., you owe $300,000. The U.S.'s money supply doesn't shrink, but its earnings grow. Disagree? Then the U.S. won't trade with you. It'll punish you, costing you more. This is tariffs. Militarily, the U.S. won't protect you. It might even hinder you. Trump and U.S. money managers plan to divide countries into 3 groups. The green bucket includes nations eager to work closely with the U.S. The yellow bucket holds neutral countries that trade and buy U.S. goods. The red bucket contains nations that oppose the U.S., seeking profit while pilfering its tech. Your bucket determines how the U.S. treats you, preferential deals, measures, or sanctions. To stay in the green bucket and get better treatment, you might sign agreements like Japan's Plaza Accord. Japan agreed not to hike tariffs much, selling dollars to buy yen. Within 3 years, the yen rose 50% against the dollar. Japanese goods doubled in price for U.S. buyers, while U.S. goods halved for Japanese consumers. Japanese stopped buying local products, favoring U.S. imports. Cash flowed to the U.S. as Japanese invested there, while U.S. investors pulled money from Japan back home, draining Japan's wealth. Business faltered. Consumption dropped, travel declined, and people left. Japan once bought U.S. icons like Rockefeller Center and Columbia Pictures. Tokyo homes outpriced U.S. ones. But as assets bubbled and money dried up, speculators couldn't offload debt. Real estate and stocks crashed, jobs vanished, and Japan's suicide rate soared. Businesses folded as capital chains snapped. American capitalists then bought back assets cheaply. This isn't conspiracy, it's a model. In the red bucket facing the U.S., you'd see import taxes rise. You'd have to devalue your currency to cope. If the U.S. adds a 10% tariff, you'd devalue by 10% to keep goods competitive. Say Vietnam's in the red bucket, its lighters get taxed more in the U.S., matching U.S. lighter prices. Buyers switch to U.S. brands unless Vietnam devalues, making its lighters cheaper again. But devaluation makes U.S. imports, like NVIDIA cards for tech, pricier. Higher tariffs mean Vietnam pays more for U.S. goods, while sharing earnings with the U.S. Open a chip factory in Vietnam. You'd face penalties unless you relocate to the U.S., where you dodge tariffs and get subsidies. Vietnam's tech and talent suffer, unemployment rises, and its economy weakens. Either way, your money flows to the U.S., fast or slow. In green bucket countries, currencies are stabler. In red bucket ones, they risk devaluation. Even green nations, like Japan, tied to the Plaza Accord, with France, Britain, Germany, Sweden, Switzerland, Canada, etc., face devaluation risks. If this classification happens, green currencies rise against the dollar. Pre-exchanging to yen could hedge against dollar drops from rate cuts. I've traded yen since I travel to Japan often, and expect Trump's 3.0 money-moving plan. If the U.S. cuts rates, and Japan raises them, the yen could spike, offering investment chances. I call yen a hedging asset. I hold it not for profit, but to offset dollar risks. Which red bucket currencies will dip? Is now the time to buy undervalued assets? Share your thoughts below. Time's short, so I'll pause here. I share free tips on entrepreneurship and investing for financial freedom. Subscribe, turn on notifications, and share this video. I hope you achieve financial freedom soon. If 1 or 2 sentences today improve your life, I'm satisfied. I'm FortuneCraft. Thanks for watching. Goodbye.